So ladies and gentlemen, once again, this is BYOB Market Talks. My name is Tasha M. Dyer, the Trade Whisperer. And I love it, I love it, I love it because we had some successful trades today. And there has definitely been a lot happening in the market, but I kind of want to break some things down for you today, right? Definitely want to do that. Now, if this is your first time with us this evening, let me get a 111 in the chat. And if let me get that 111. And if you are still learning how to cash out, let me get a 222 in the chat. Let me see. So welcome and welcome back. Welcome and welcome back. I like it. I'm always learning. Welcome and welcome back. So now I'm gonna go ahead and share my screen. But before I share my screen, I'm gonna just kind of dive into where we're headed. I'm gonna kind of give you a little introduction into where we're headed and why we're headed there, kind of what we're talking about. So we kind of, on the morning calls, we kind of talked about the news. We talked about the news just a little bit, okay? We kind of broke it down, and we've been talking about trading and understanding the BYOB cash out, understanding the confluence of the BYOB cash out, utilizing the tools. But then a few of you all also, but we've also, this morning, we had a conversation on the indices. And I've gotten quite a few messages about the indices. And I want you all to understand how the market moves and how it does and why it moves certain ways. So just kind of want you guys to understand that. So as we dive into that, as we get into that, this is definitely something I want to, let me pull this up for you guys. So as we get into that, there are some things that I want to kind of cover with you guys because I want to paint the big picture. And it is definitely going to help you understand, some big picture, some things so you can walk in the right energy. But as I do that, right, there's definitely something I want you to understand about these affirmations, right? There's definitely something I want you to understand about the affirmations and the things that we talk about, the affirmations and the things that we say, the affirmations, and right, it's important. You have to walk in the right energy, okay? You have to walk in the right energy. The energy you walk in is very, very important, okay? That energy is important. I cannot stress that enough. That is why we begin each call with affirmations. That is why we walk in each call, even on this training call, about affirmations, right? Being a master trader, being the signal, all your trades and in profit. And so you notice that if you are trading with us and you haven't if you're new to trading, it's your first time trading, right? You haven't traded before, you traded with another educator, whatever your story is. What would BYOB, the reason why this is the largest economic empowerment movement of all times is because economic empowerment. You see that piece of it, the economic empowerment. So sometimes we're gonna bring this back and help you understand the basics. We're gonna roll this back and help you understand how the market moves, what it is, because these evening calls are designed to bring that clarity, right? These evening calls are designed to help you understand the clarity of the market, where we're headed, where we're going, to help you understand how you generate wealth. That's what this is all about. And so as we do that, right, as we dive into that, what I want you to understand is the psychology of the market. So remember I said we ride the wave of the market. Okay, when you understand the psychology of the market, this is why you cannot trade emotional. This is why you have to be in a place where you are literally non-emotional, okay? This is why you have to be in that place, okay? So this, I want you to be in that space, right? And this is where I always want you to be. And so when you're here and when you're in this place of non-emotion, you understand that the market is an emotional place. And so if you really think that, you really think about what's been going on and what's been happening and how things have been happening, you know, you think about what's been transpiring, then you understand the emotions of the traders, right? So when we go through this and we talk about, you know, we sit and we watch, you know, we're going to watch what they're doing. We're going to pay attention to how the market is moving. This is what we do. We cannot move the market. I don't care what your bank account looks like. You do not have the liquidity to move the market, okay? You do not. The banks move the market, which is why this movement is be your own bank, which is why the strategy is be your own bank, cash out, right? So I know you guys are so used to being short for be your own bank, BYOB, but the strategy itself is be your own bank, cash out. The movement is be your own bank. So it is a movement and it is an experience. And that is what you're experiencing right now. So you are shifting right? This is a lifetime. This is a legacy. This is what is happening. And so this is a mindset. So this is what you are. So now I want you to look at disbelief, okay? So, and I really, really want you to pay attention, right? I want you to really pay attention, right, to what, you know, I really want you to pay attention. So disbelief and disbelief is on both sides, right? Disbelief on this side, disbelief on that side. So disbelief, you got hope. So this is how the market moves. You kind of see this pattern is on charts, okay? This pattern is on charts. So you got disbelief, and then the market starts moving up, where you kind of see you got your hope, right? Your recovery. And what do you see right here? I want you to pay attention because this is your price. This is your price that's on there. This is your price. And then, of course, you have your time, right? The time that the market is moving, okay? You kind of have that. And, of course, this is price. Now, what you're also looking at is you got optimism. So the market started moving up. You got the optimism, and then you got belief, and then you have thrill. Okay, I got to buy more. I'm going to tell everybody. And then they sit it for you. Okay, you sit it for you. And you kind of watch the Dow. You kind of watch the market go through this, right? And so notice how when it drops, when you get to that complacency, and then of course it starts the anxiety, and you guys go through this in your trades. Okay, you have these emotions. I know it. I've had the kind of conversation. So, you know, you kind of have that. So, and then the denial, and then panic, right? So and when it drops faster than it rises. It drops. And so you can kind of pay attention, and you see that on the charts. So you got your complacency, I got my anxiety, you know, this is a dip, right? It's going to turn around. The market's going to turn around, but when is it going to turn around? It's taking longer than expected. And then you're right here, my investment's going to come back. They're with great companies, right? They're going to come back. So remember, because when you buy investments, you buy, hope, wish, and pray that it's going to rise in value, right? Well, I buy, wish, hope, and pray. So no, you talk about investments. Are those investments about to kick back in right away? This is why they're impacted. They're so hit. They're heavily hit by what's happened right now, by what's happening in the market, right? All of this stuff is impacted. And then now this is where I need to get out. Everybody want to sell at the same time. Everybody want to get out at the same time, right? Everybody. And so, and then this is where you start thinking, I cannot afford to lose anymore. I just can't, you know? And so now everybody's angry. And who are we blaming? Oh, it's the government. Who did this, right? We need an election. Who did this? The government let this happen. Everybody's upset, you know, because we have to blame somebody, you know, as opposed to understand this is cyclic. The market moves in cycles, you know, or things impact the market. There are things that are going to impact the market, like COVID, right? It's the worst thing that's ever happened. So we saw it happen so fast, but those things and things like that actually are going to impact the market. So now when you sit there, and you start thinking about depression. You lost your entire retirement account. What do? I'm an idiot. Oh my gosh, it'll never happen, right? So this is the cycle of the market. This is why you have to trade non-emotional, because we're not investing. There is a difference between investing. There's a difference between investing and trading. Okay, there is a huge difference. And so then you start sitting here like disbelief. Okay, this is that disbelief that you have where, okay, this is a sucker's rally, right? This is such disbelief, you know. And then of course this rally will fail, right? So when you think about when you're looking at that trade and you're on that hour and that 4-hour chart and you're kind of looking at it like, is this thing gonna come? Is it gonna start moving up? When is it gonna do that? And you're kind of waiting on it to, you know, that trend line to change, and you're kind of waiting on that movement to happen and that movement to come up, right? So they're thinking the same thing. Why do you think you're thinking that? Because this is what they're thinking, right? You know, this is what's happening. So, but yet it happens and it comes up. So this looks like the market. You know, this looks like the market. So this is why when you sit down, your mindset and everything else has to be in the right place. You have to be able to view the market from the right perspective, because you have to understand what's happening. You have to understand. And this chart was made before COVID. So if this was made before COVID, then you understand, guess what? It's not the government's fault. Because, you know, it's not. Because where are you at right now? So now let's look at this. Let's take a look. Hold on. Okay. So now let's take a look at this. So if I take a look at this now, and you look at what transpired, now look at this is actually a chart. This is actually GBP JPY. Now, doesn't this look like that? And this was in 2008. So what happened, right? It looks just like it. It looks just like it. So this is the cycle of the market, okay? It looks just like it, okay? And then you look at, so this was 2019 into 20, of course, before COVID, this chart was made before COVID, but look what's happening. So you look where it was already at, okay? But look, doesn't it look like the same exact thing? Doesn't it look like the chart that we just pulled up? And this was, I mean, so the same currency pair in two different times in history, and it looked like the same chart. I can come here, Euro USD, right? What happened in 2008, right before 2009, we had the housing crash, right? So what happened? The market was moving up, and then voila, bam. You see how fast it moved down. So this is what the market was doing. And so then it turned around and it came back. So it's moving in cycles. So understand that when you understand this and you understand that the market moves, you just have to understand where the market is. You just have to understand. So when I say check the news, check the red folders, let's look to the left, right? This is what I mean. So it's no such thing. Exactly. History will repeat itself. If it's no such thing as something new, this already has transpired and it's already happening. So you can't get frustrated. You cannot get upset. You have to look at this and you have to understand what is happening in the market. So before I keep going, you know, because I have a few things I want to cover with you all, drop it. If you got a question, drop it in the chat, because I got quite a little bit that I want to cover with you guys, because I really, you know, like I say, market talks, market talks, market talks, market talks. The market has to talk to you. So I'll keep going. All right. Now, this is what I want you to understand about the currency strength. Now, understand that based on what you just saw, the market feeds the currency strength, okay? Based on what you just saw, the market feeds the currency strength. So when you're trading currency, we always say, I'm gonna buy and I'm gonna sell. You're buying and you're selling. So you're gonna buy one currency and you're selling another one at the same time, okay? That's what's happening. You are buying one currency and you're selling the other currency at the same time. Now, your base currency, okay? Like in this example right here, your base currency that's highlighted in green, that USD JPY, that is your base currency. So the USD is the base currency. Your counter currency is on the right. So I'm literally buying and selling at the same time. If the base currency is stronger, okay? If my base currency is stronger, then I'm going to buy. That's when I buy. So I'm literally buying USD and I'm selling JPY. You're not physically doing it because, you're not physically doing it because you don't have that. Like, it's not in your hands. We don't physically own any currency. You're trading on it. But there is actually transactions that's taking place on this. So if you're buying the market, that base currency is stronger. If you're selling the market, right, the sale happens first and that sale currency is stronger. So that counter currency is stronger. So you understand. Now, of course, there are apps that you can check. There are things that you can check to help you understand it. But I don't want you too caught up in, oh, let me check this trade. Let me go pull this trade. Let me go check the currency strength. Use it to understand the strength of the market. Because if I was to go back to this previous slide, right, and you were to look at this, then of course, as I'm looking at this, then of course, euro would be stronger. At this point, euro would be stronger. So I'm explaining that right now. What's my take on currency strength before entering the market? That's what I'm saying exactly right now. So if I'm looking at that, of course, euro would be stronger, but the market is telling me that euro is stronger. So I'm feeding off the market. Now, I'm not doing it every single trade. You can use it to get a general synopsis and an understanding of what the market is doing, right? Because if you look at that thing, it's going to be shifting and it's going to be flowing. If you try to look at one for each and every single trade, because they have some that go down to the 5 minute, the 15, the 30, the hour, you are going to be so heavily reliant on that. And that's part of what we're talking about today. You do not need to be so app dependent, so indicator dependent that you do not let the market talk to you. Because you can get too indicator dependent that the apps don't, that I'm saying apps because we're talking about an app, but you can be so indicator dependent that the market, you don't hear the market, right? You want to hear the market. You want to hear the market, okay? You want to hear the market. Now, this is important. This is important, okay? This is important. Your analysis, okay? Your analysis. You have your technical analysis, and this is, I'm gonna hit the indices in this. I'm definitely gonna talk about the indices in this. You got your technical analysis, which is my BYOB cash out. Blue line cross over the red and the up or downward movement. I got my red candle with a flat, I got my red candle, green candle flat, top flat, bottom piece R flip, right? Technical analysis, fundamental analysis, right? My fundamental analysis. My fundamental analysis tells me, what's happening, right? It's impacted by what is happening, right? External events. COVID. This talk says unemployment rate, right? That came out this morning. But, COVID. And then the sentiment. How do you feel about it? This week we was talking about bank news, right? So this week we were literally talking about bank news. So now you want to understand. Let me give you an example. This is like, I'm gonna say like Dr. Bytewoodism is snatched from the headlines of my life, right? Thank you, Dr. B, for that. So, but realistically, if you really want to put it in the situations to help you really, really understand it, COVID has impacted all of our lives, right? It's really shifted and impacted all of our lives. So technical analysis is, you guys hear me talk about my daughter all the time. So I have a 5-year-old. And that technical analysis means that this past school year that was impacted, she was in kindergarten. So that means that she is in a certain skill set. So she is in a certain space. She is in a certain, school zone to where she's supposed to go to school. She meet the criteria, where she is on the stochastic, right? That means that around the 80 or the 20, she meet the criteria. She's the right age, birthday in the right place. We live in the right area. That's my flat top, flat bottom, right? We live in the right area. And then of course, did the PSAR flip? So we got the transportation needed to get her there because she go to a STEM school, right? So all of that's there. We got the technical analysis. She passed the test, she got into the school. Technical analysis, everything's lined up. Fundamental analysis says COVID came. So it did not shift the fact that all the criteria is met. However, my fundamental analysis says that COVID hit and she cannot go to school. But yet I got all my paperwork. I got everything that says she need to be at school. But my fundamental analysis says she's not going to school. So that's the fundamental analysis, external events, influences. So that's when you guys are asking the question, well, what about the stochastic? Did you see where it's at? Did you look? Yeah, what about the school? Is it open? This is what, now I'm not on sentiment, but we're getting there. But this is the fundamental. Because COVID hit, you got to stay home. Now the sentiment is, how do you feel about it? It's how do you feel about it? Because how I feel about it might not be how another parent see, because I'm my own bank, right? Be your own bank. I'm my own bank. So I'm okay with it from that perspective. Another parent who is working and can't take off and is still having to go out and trying to figure this out, their sentiment is different because now they have to figure out what they're going to do with the 5-year-old. So their sentiment is different. That's the difference in the analysis. So when you're trading and you see the news come out about the banks and you see the information come out about the unemployment rates, or you see all that stuff, when I say hold on at 9:30, we got to wait a minute, because how is it going to impact? What do they think about it? How, hold on. That's why. How do they feel about it? We don't move the market. This is why. What are they going to do about it? That's so important. So what has happened is a few things have happened with this. One, you should not be for trading, and I've said it before, your indices is like your bonus check. Trading indices is like your bonus money. Your indices should always be in a separate trade account, right? You should have we got to practice proper risk management. So I should have my Forex in one account that I'm trading with, and I should put my indices in another account, proper risk management. But if the market is feeling some kind of way, if the market has a certain feeling about what's going on, and we know we got a lot of bad news out there, do I need to be in the indices that day? If I know what's happening and I know I'm around that news alert and I know what's going on, do I need to be in the indices? Should I be in the indices? Should I be trading them? And I know they move 100 miles an hour. So that means they can buy, they can sell. They can buy, they can sell. They can buy, they can sell. Because we know that the sentiment and the fundamental analysis is going to completely take over my technical analysis, right? Yes, the indices are the US 30, right? The indices are those NAS, the US 30, and all of those things. So does that make sense? And the questions that I have gotten has been because those are the factors that has not been being paid attention to. Those are the factors that has not been being paid attention to. And you have to pay attention to those factors. So you should never mix that. Treat it like you do. Because, I mean, do you have your play money mixed with your bill money? You have to have proper risk management. So you have to You have to have that proper risk management. So that's where all of that comes in. So hopefully that clears that up, because I cannot stress that enough. And if the market has a lot coming out that we, like this week has been a week where we've had different, you know, from the US feds to Euro, GBP, and everybody else. And if all of that is happening this week, you got a lot of fundamental and sentiment analysis that's happening out there. So you already know it's not settled. They have a lot of emotion that's mixed in those reports. So if they have emotion in those reports, then you sit back and you wait, because we ride the wave. We can't move the market. And then you have to remain non-emotional, because then you sit down and trade your Forex and now you're emotional. And then you calling, or you texting, or you telegramming, and it's all the same answer. The answer is all the same. Proper risk management and understanding. Proper risk management and understanding. That's the answer. Questions, comments, testimonies in the chat. Questions, comments, testimonies in the chat. I don't know if I'm gonna get to pivots tonight. I don't know. I got a few things I got to get covered tonight. All right. You are so welcome. Now understand, this is actually the candle, right? This is the candle. I wanna help you understand the BYOB cash out, right? So these are the candles. So you got, when you have your candles, right? Now this is a Japanese candle. And when you have your Japanese candle, you have the body of the candle. So you have the body of the candle. So you got your bullish candle, you have your bearish candle, right? This is the actual candle. So for it to be a bullish candle, this is where the candle opens, this is where it closes, and that's what forms the body, okay? Your wicks, when it wicks down, okay, when it wicks down, you know, this means that it actually pulled down this far, but it didn't close there. So it opened here. This is where we always are, where it opened, right? Where it opened. Then it'll pull up. So this is as high as it got. This is as low as it got. So that's what forms the wicks. But right here, you actually have your body where it opened and closed. So if I'm selling on a bear candle, that means I open higher and close lower. It's just, I mean, that's putting it in perspective, right? So where I have my wicks, I actually pulled up and I pulled, you know, where it actually, so this is how far it covered, but your body of the candle is actually in between here, okay? I got my open and I got my close. What the Hikanashi candles do, so this is where you guys are asking, before I even say that, this is where you guys are asking, do I have to wait for the candle to close? Do I have to wait for this? Do I have to wait for that? Because these are the candles you're familiar with. What Hikanashi candles do, right? What the Hikanashi candles actually do is they interpret this for you, right? They actually interpret these candles. Now, another question that you guys have been asking lately is understanding the time frames. So this is not how long it takes a candle to form. What these time frames are is how long you're actually on this chart. So, you know, how much it covers. So if it only covered 1 pip, let's say it covered 1 pip, then you will have a very small candle. If it covered 50 pips, then you're gonna have a long candle. But the 1 minute, 5 minute, 15, 30 hour, whatever chart you're on is how long each candle forms, okay? That's how long you are, and that's how long each candle forms. So that means that if I'm on the hour, right? If I'm on the hour chart, that means that I'm gonna be on that chart on that candle for an hour. That has absolutely nothing to do with how many pips that candle covers. Because, like, for example, this says I'm on a 15-minute chart right here. I'm on a 15-minute chart. Now look at these different candles. This candle is a nice size candle, But then look at this candle. It's so little. It's a little bitty candle. But then look at this one. It's huge, right? But each candle it took 15 minutes to form. Each candle was 15 minutes. So how many, the length of the candle has to do with how many pips got covered in that 15 minutes, right? So hopefully that brings some clarity to that, because that should bring a lot of clarity to that, right? That should bring some clarity. Now, this is what you're looking for when you're trading, okay? This is what you're looking for when you're trading, okay? This is what you're looking for when you're trading. The trend, your areas of value, and your entry triggers, okay? Now, in your areas of value, what's the area of value? Your areas of value are your support and resistance, your moving average, and your trend line. Your support and resistance, your moving average, and your trend line. Now, you've heard me say the BYOB cash out, right? The BYOB cash out is price action with a twist. So it's going to give you that twist to it. It's going to give you all of that. So now, when you think about it, this helps cover that, you know, the recording will be up on the YouTube channel. Welcome to BYOB. So the trend, right? And then you have your areas of value. So support and resistance, your moving average, and your trend line. And you got entry triggers, okay? So I'm going to show you exactly what I mean. I think I'm going to pull up the chart and not do it on here. So let me change my share. I'm going to pull up the chart. I'm going to actually go to the chart. So I'm changing it right now. And can you drop the link? I'm just trying to do a new share right now. All right, so I wanted to pull up the actual chart. So now, what I was just talking about, right? Thank you. So what I was just talking about right now, right, is you got trends. Now let's talk about you got your trend, you got your area of value, right? Actually, you know, oh, you are so welcome. It says you bring so much clarity. Just brings so much clarity for you. You are so welcome. Now, you got your trend, right? Which is a trend. You got support and resistance, right? Support and resistance. In here, in the stochastic, right? You got your moving average. So if I wanted to add, let me see. If I wanted to add, let me just show you. I'm going to just show you because I don't want you guys so indicator dependent on everything, right? So if I wanted to, you can't see it, so I'm gonna just put because that's one of the, I'm gonna just use one of them, and I'm gonna change the color to something. I actually want to make the line real bold so you can see it, okay? We're gonna make the line real bold so you can see it. Now, if I put the moving average on there, which I should have made it probably something other than orange, look at what it's doing in conjunction with my stochastic, right? Your visual learners, you're welcome. Look at what it does. If you guys can see that in there, maybe I should pick another color, right? Pick another color. All right, so now look at this. Somebody say pink, but that'll still be close to red. Now look at this. Look at what it's doing. Look at what that moving average is doing, like this one. It's still running with the stochastic, right? It's running with the stochastic. So I know a lot of people like moving average, but look at it. It's running with the stochastic, see? That's why I don't have it on there. It's running with the stochastic. So either one you pick, any one you do, look at how it kind of runs with the stochastic. So you using the moving average is part of the stochastic, okay? So the stochastic, what it's made up of, is part of it. So when you talk about, you know, just so I can help you understand, you know, when we're looking at the BYOB cash out, that's actually part of it. So just to kind of really help you understand the strategy in its totality, you know, when we're actually looking at that, okay? So this is why this is so accurate. This is why it works so well. This is why it back tested at 92%. So now when we look at this, and I'm gonna just show you, and you know, I don't know, we might hit time frame confluence a little bit tonight, but just kind of show you. So in your trend lines, okay, and I'm gonna turn this back off. So in your trend lines, okay, in your trend lines, now you see this is a trend line. And so these are trend candles. So I'm already in my areas of value. You see, we already got my moving average covered. We got our trend, we got trend candles. So we have that covered. And then support and resistance. My PSAR is a trailing stop loss. It is a support and resistance. However, that's why the stop loss, before I even go there, that's why the stop loss in the market tells you the stop loss. I don't have to say, oh, let me do 15 to 20 pips for a stop loss. Let me say I want, you know, 30 pips for a stop loss, 20 pips for a stop loss. The market tells you where the stop loss is because this is that trailing stop loss. Support and resistance is always like your take profit, your stop loss, right? So I just dropped 2 of them on here. I didn't go through here and kind of draw all of them and everything else. I didn't want to clutter up the charts. I wanted to keep it clean so I can kind of help point a few things out for you. So if you're looking at this, what you're seeing is so let me go through the strategy and you'll understand what the PSAR is. So I'm gonna go through the strategy in just 1 second. So what you're seeing, but the PSAR is the dots on the chart. Those are the dots. The candles are Hikanashi candles and the stochastic is at the bottom, but the PSAR are the dots. So what you're looking at is you have everything covered with the BYOB cash out. So I have all my areas of value. Now, the beauty behind it is what the vibrato does and why all those trades hit. You know, let me get a 777 in the chat. You were on this morning's call and every last one of your trades hit that we took from the vibrato that we took together this morning on this morning's call. Let me get a 777. You took all those trades that we pulled from the vibrato, right? All of them in all caps, right? So yes, all of those trades hit. When you understand how the tool works and you understand the BYOB cash out with all those areas of value, because this is it in its simplicity. So now, this is it in its simplicity. As I'm looking at this, I'm gonna take the stochastic off so you can kind of see what I'm talking about. Now, as I'm looking at a trend, right, which is one of them, I got a trend line, which is my trend candles, okay? What happens is where you enter trades, when you're taught where you enter trades, and I'm gonna come back to those who need to understand the BYOB cash out, and I'm doing it like this for a reason. Where you enter trades is you normally enter, and then when it hits a support and resistance line, what happens is you get that pullback. This gives you an entry trigger right here, right? I get an entry trigger right here. You're gonna get a trigger right here. You're gonna get a trigger right here. There's gonna be something right there that's gonna give you a trigger. And then you're gonna get a trigger because of course there's another line up here. So you're gonna get a trigger, let me focus on these. You're gonna get a trigger here, right? In that correction, you're gonna get a trigger here. Let's focus on the ones that'll happen on the trend line. Because you're gonna get those. So you should have had one around here. You're gonna get one around here, right? So all of these places, you're gonna get triggers. So you'll get some other ones, and then what you do is you come back and you place a strategy, because even when I placed one here, everything didn't line up for you. It shouldn't have lined up for you. So when you take the BYOB cash out with the time frame confluence, this is how you would have entered a trade, and you know you could turn around and trade it back up to my resistance line in this case, or if I was trading down, it would be support. You know, they're all the same line, but just depend on the direction you're trading. So it would be right here. It would trade up to my support line. This would trade up to my support line. This would trade up to my support line. Your take profits are always at, it's either if you're a 111 and you don't understand support resistance line yet, right? Then it's going to be a 10 pips and cash out, right? 10 pips and cash out. If you are if you understand support and resistance, there on that playlist, that's why we've gone back over that. That's why I always tell you your support and resistance is your lifeline. You want to understand it. You want to grasp it, right? You want to get it because it is your lifeline. You notice that because it's even still another one right here. You notice that it's going to pull back. It's going to go. This is how it works. It's always impulse, correction, continuation, correction, continuation, correction, right? And then, of course, one of the other things that because I see one of the other things you guys normally don't see me take a lot of when we take the harmonic patterns is on the lower time frame. This one would have been called on the 15-minute chart. That's something that would have been called on that 15-minute chart. I got to throw it in there because I see it. It would have been called on the 15-minute chart. So these don't always have that turnaround effect. They don't always have that turnaround impact. So this is why this is just a free nugget right now. We'll address this later. But this is why, we don't always have that. So kind of we're going to come back to that. So if you are using the trend line to see where the trend breaks, are you using a couple of touches? It's a couple of touches. It's a couple of touches, but I had already drawn them before the call. I just already drawn them, but I can see where they're at. I can see where they're at. So easy way to draw support and resistance is to add the pivot. That's going to give you, if you're looking for pivots, then you're looking for like the longer trades. What I'm trying to explain right now is the accuracy and understanding the BYOB cash out and understanding your areas of value so you can understand how to use this tool to take some trades, regardless of what time frame you're trading on. That's what I'm trying to show you right now. That's what I'm trying to show you. And so when you understand it from the foundation, then when you bring it up, it's going to really bring clarity, and clarity, because what I will see and what typically happens is, this is really close to, no, pivot points and support and resistance lines are not different. Really, they're not. You think that they're not. The pivot points are, and we'll looking at the time, I'll get back into pivot points again, but they're really not different. They're just the ones that the market identifies. So, but we'll definitely come back and address those pivot points again. So right now, what I'm trying to show is with the support and resistance lines, the pivot points are just those major turnaround points, but they're still all support and resistance lines. So, and when you look at this, and actually it's on that playlist too, if you want to look at it before we dive back into it. So when you look at this, you can kind of see that turnaround point, that pit, like where it kind of put impulse, correction, continuation. And so when you see like when we saw those calls, that's what it is. So when I'm looking at it, I got, this is my support and resistance. I have my moving average and I got my trend line, which is my areas of value. So this is why I don't need 100 indicators. It's why I don't need, I don't need my chart flooded with so much stuff. And you can trade with a clear mind. You can trade with a clear chart, because what you can have analysis paralysis and you have all this stuff on your chart and you won't make no money, right? Because you're sitting there looking for all of this stuff. And then you're looking at, you're pulling up currency strength indicators. You're looking at everything. You got 30 indicators on your chart. And then you're just sitting there staring at it because you don't know what to do because they're all saying something different. You got to let the market talk to you, right? You have to let the market talk to you. So now, let's see here. For those of you all who are asking, like, and what you're looking at right here is like the range area. And so, of course, so if I was to look at this, of course you have those different points and those different things as far as when I'm looking at when I can actually take a trade. So if I'm looking at this, to understand the BYOB cash out, let me drop down to the 15-minute chart, and I'm gonna explain what the BYOB cash out is. And so for those of you all who are new to the call, now this is gonna bring clarity to some of the things you just saw. Because some of the stuff I just explained, you know, of course, was a little price action. But then, of course, when you add the BYOB cash out to it, now you're going to be able to take that. You're going to be able to understand when I know when to enter the trade, because you got to bring everything back and you got to BYOB cash out it. You just have to, because that's why your accuracy stays so high, because there's no guessing. It removes all the guesswork. So if I'm on a 15-minute chart and I'm looking at this, okay, and I'm gonna actually look at it from this perspective right here. I'm gonna just use this one right here. So like we say, we got 3 indicators. I got my blue line cross over the red at my stochastic. So understand my stochastic. I got 0 to 100, right? My stochastic, 0 to 100. Now, right here, I got that blue line cross over the red around at 80. I got that blue line cross over the red around at 20, right? That's what I'm looking for. Blue line cross over the red around at 80. Blue line cross over the red around at 20. That crossover and cross down is so important. Now, right here. Then, of course, I'm looking at this, my Hikanashi candle. Remember, they translate, they convert for you. So if I was looking at Japanese candles, this is what Japanese candles would look like. This is what I'm looking for. So you can kind of see what that candle would look like with a Japanese. So for all of you all that ask that question, do I have to wait, right? Do I wait until the candle closes? Do I wait? Look what happened. So you see this candle right here? What is that type of candle, right? So for those of you all who understand Japanese candles and understand that we have to wait to that second candle because we got to wait for that first candle to close, and we get that engulfing and we do all this other stuff, right? Then guess what? What did that candle look like with my Hikanashi candle? It's right before my arrow, right? So what does it look like? It got a nice little wick. Yep, thank God for Hikanashi candles. I thank him too. So I don't have to try to sit there and translate and do all of that. What happens is that candle has a wick on it, so I know it's. Then when it tells me I'm ready, now I actually got a red candle with a flat top. Hikanashi candles. They convert, they translate, they do all the interpretation for me, and they just tell me when this trade is ready. So I don't have to wait. I can just actually execute my trade. And then I would make sure I got my PSAR flip. Now the PSAR is that parabolic stop and reversal, right? That's that trailing stop loss. So that's what that is. And so it's really like a moving support and resistance line with you, because where do you put your stake? Where do we normally like put our stop loss? If we're on the prime example on the scanner, on the harmonic scanner, where do you always see the stop loss? You always see it on a support or resistance line. It's always on that. And then I tell you, never put it on it, you put it above or below it, because it will come back and touch that line in a heartbeat. But that doesn't mean it's gonna stay there. Like you would always put it there. So if this was the harmonic scanner, right? So you go up. So one thing that confuses me, the candle starts without a wick. No, now I addressed that this morning. So on the lower time frames, it might get a little wick later, but that's only because of some of the resistance that it starts growing into facing. But that's why your time frame confluence is so important. So you want to make sure you have time frame confluence. So like right here, I have my trade set up. My trade is great. My trade is good, right? It's right here. So, you know, I drop down to my 5 minute. You know, I drop down to my 5 minute. You know, drop down to my 5 minute, and it's going down. It's still selling like it should be. I go up to my hour, and when I go up to my hour, right, what's happening at my hour? My hour, my confluence is selling. So I know at this point, I can sell to my support line. I can sell to my support line. I can sell to my support line. And technically, it would have been up here. That's the one we would have stopped at. So you can sell to your support line. It went further, which you can run a trailing stop loss, you know, what have you. But even still, for that trade, or if you, like I said, if you are new, You know, because look at that. That's like 43 pips. If you are new, right, because 15 minutes is technically scalping, right? So if you are new, then you understand that, you know, if you don't understand support and resistance lines, then you are looking for 10 pips and cash out, okay? 10 pips and cash out. Get your 10 pips and cash out. Once you begin to understand support and resistance lines, then you cash out. So exactly, the confluence, time frame confluence is dropping down to make sure it's still selling. And then the one on a higher time frame needs to look like something you put on your watch list. So I don't have it set to, it's UTC time. The time really doesn't matter. It's UTC time. See right here is UTC time. So it actually calls it a UTC time. The local time is really for you to know, like if I was trying to convert it, this is where you could actually help. Yeah, it gives local time right here. I'm saying your local time. So what mine says, if you're in a different time zone, should be different than what mine says. So yours would be different than mine unless you're Eastern. So only people in Eastern right now would be like 9:50 when this was called, because it was called 2 minutes ago and it's 9:52. But it was called at 1:50 UTC. So the time on the, oops, I'm not trying to do all that. The time on the vibrata is now 150, well, actually 153 now. So the time on the vibrata is the local time. You can't change that. It's just the local, it's the UTC time, not the local time. It's the UTC time. But the time right here, it gives the time it was called in UTC time, and it gives the time that has passed in local time. So, because I might not understand UTC time for me to understand how long ago it was, but it's just for clarity. So local time and how long ago. So this is all for clarity. So it was at 9:50 and it was 3 minutes ago. That's all for clarity. So the 1 hour candle, so on one candle, the PSR could be above, and with the same candle, it could flip right below. So on one candle, so I think I know what you're asking. Hold on. So notice that, well, let me just explain the PSR. Maybe that'll help answer your question. So the PSR, when I say the PSR flip, notice how the PSR right here is above the candles as it's selling. When the momentum shifts in the market, okay, when the moment, now the correction of PSR flipped to the bottom, but the PSR is up here, right? When the momentum shifts, that PSR flips, and now it's in a buy, and the PSR is at the bottom. So the PSR is that parabolic stop and reversal. Parabolic stop and reversal. So when the market reverses, when there is a reversal in the market, the PSR is going to flip. So when the market is selling, the PSR is on the top. When the market's buying, the PSR is on the bottom. So that's what that is. If I'm trading off the 15-minute and have confluence on the 5 and the hour, then during the trade, if the no, that's not a signal to enter the trade. Once you do your analyzation and you put your trade in, put your phone down. That's it. Put your phone down. Put your phone down. Trust the process. Let it ride. Put your phone down. Trust the process. Let it ride. Do not jump out of trade. You got to trust the process. I think a few of you guys experienced that with me the other morning, because we had one that went in some pullback trades. Go in pullbacks. Okay. Look at where we are right now. Look at this. Where'd it go? Hold on. Oh, it's on the hour. That's why it looks so spread out. So look at this. Trades go and pull back. There is absolutely nothing that is going to just be straight, right? So no, that's not what I said. That's not what I said. Trust the process, put your phone down, it's gonna play out. That's what I said. I did not say assume it won't play out. So I just said I put the trend line on the higher time frame. So it was the screen was spread out. The screen was spread out. So the screen was spread out. So now, if you're looking at this, you can actually see, you look at this trend line. Now look at this. This is correction. This is, you got correction in here. You got correction in here. Now, understand this is still all this is still all in a buy, right? It's all in a buy. So no matter what time frame you're on, right? No matter what, just look at how much smoother. You don't see the corrections as much on the 4 hour. But if I drop down to the lower time frame, it's still going in a buy. The overall trend in the market is still in a buy. This is what I meant this morning about you just don't know where you are in the market, because look at all the movement that you have. If I'm all the way on the 5-minute chart, look at all the movement that I have. Look at all the movement in those candles that I have. So you need to know where you are and what the market's doing. Look at all the movement. You got so many more candles and so much more movement. So your confluence and everything else is still very important, but in the grand scheme of things, it's still a buy. It's still a buy. In the grand scheme of things, that's still a buy. You just have more candles. You just have more candles. And trade on the phone. I enter my trades on I enter my trades on my phone. I enter them on my phone. So definitely enter them on the phone. All right. So that's the BYOB cash out. That's that. And I really want you guys to understand that, because with everything that's played out this week in the news, everything that's played out, you know, I got so many questions. You guys have to trust the process. So you guys have to trust the process. How do you pick the strategy? You come down here, you click right here at the bottom, okay? BYOB cash out, BYOB cash out, right? Well, right here where it says strategy, down here. So hopefully you can see where I'm at. And then you come down here where it says, it's right here at the bottom. And you gotta click this. I'm gonna change my screen share really quickly because you're not gonna be able to see it. So now you can right here, when you do that, you're gonna click BYOB cash out right here from this drop down menu, BYOB cash out. And you know, you can turn your cha-ching on or off, whichever you want. The chart details that we always talks about, you have to select it. You have to do the drop down and you have to select it. You have to select it. And then you come here, you can cut those chart details on. And so for whoever was asking about pivots, this is where they are, right? The pivots are in here. So if you actually have a Mac like I do, or if you're on your mobile phone, like some of you guys are in the chat, you have to actually save, right? Save for mobile phone and Safari. Then you have to save again. Okay? And that's that. That is that. So, that's a good analogy. The longer time frame is to show the direction of the goal. The shorter time frame is showing the work being put in to achieve the goal. That's a pretty good one. All right. So that's, ladies and gentlemen, with that being said, so no, bring everything back over here. Go